Hello students, today we will be discussing under the cost accounting towards issue of materials, principles of valuation of materials thereof. See, in production process from store, material issue is very vital for your pricing concept. You see that some cases you are lot by lot you are storing in your godown, but when your store to it will go to the factory where actual production is produced, how you are to take, whether which material is come last it will go first, or which material is come accordingly in the order in which it is received, it will be issued. So there are lot many issues on that concept. Will be going by one by one. You see that whatever method you follow, the appropriate assumptions will be there. That is your first in first out basis हो सकता. Which material comes first, it will be going first. That means current stock valuations will be there. Last in first out means which material will come last, it will go first. So stocks will be at old price. Another is your weighted average rate. The method of valuations, whatever method you follow, it should be followed on consistent basis, because there should not be any deviations or fluctuations from one method to another. Next will be going where materials are accounted at standard cost. The price of variances related to these materials shall be treated. You see that when you are pricing on standard pricing, standard cost method, so their variances you have to take it. You see that whatever format you follow, standard cost doesn't mean that it is an actual. So that's why any variances that also to be taken into consideration. ये तो एक नेचुरल पॉइंट है. Any abnormal cost shall be excluded from the material cost. Now we will be going for some other points of principles. You see that where materials are include transportation cost, suppose inward material cost, that will be added as per the principles of cost accounting standard 5 CS5 to determine the average cost of transportation. Next point is that material cost may include inputted cost not considered in financial accounts. You see that inputted costs just for cost accounting purposes you are taking, but financial accounting doesn't find place. Such costs which are not recognized in financial account may be determined in inputting cost usage by measuring the benefit from alternative use of resources. So these are the basic principles of valuing and store issuing. Now we will be going for methods of pricing of material issues. You see that there are a number of methods for stock pricing. One is your first in first out method, another is last in first out method, base stock method. These are first three methods are cost price method. Now some specific price methods are there, like your average price method, simple average price method, weighted average price method, moving simple average method, moving weighted average method. There are so many methods on that issues. Some other methods also there, that is your one is your under market price methods, that is replacement method, realizable price method, under nominal price method, standard price method, install price methods are also is there. Now we will be going one by one and discussion of the same. The commonly used methods are your first in first out method also. That means which material comes first, that will be issuing first. That means your valuation of stocks, raised stocks will be your latest coming only. You are getting my point. Suppose which material comes first, it will be issued. That means old stocks clearance will be there. and your current cost pricing will be stock pricing. It is a method of pricing of issue material in the order in which they are purchased. You see that the chronological order in which it is purchased, accordingly that stock wise it will go. That means old stock clearance will be first. In other words, material are issued in which they arrive, in the order in which they are arrive in the stock. Same way, this method is generally suitable at the time of falling price. That is very important, that thing. When material price is rising, this method is not appropriate, because under falling price material cost charge in production will be high, while replacement cost of material will be low. You are getting my point? Suppose when your falling price situation, your old stock will be cleared, for that your current lesser stock price will be in your stock. Definitely, if it is in falling price situation is appropriate, definitely this method will not be suitable when the price is rising. So this is other way around. Okay. So next is also commonly used method, that is your LIFO method, that we can call last in first out method. So last in first out method, under this method, which material comes last, that will be moving first. Under this method, price of last receipt batch are used for pricing issues until it is exhausted. That means last lot which is coming, that will complete it. After that, immediately before that purchase, that will be going, this will going on. During the inflationary situations or rising prices, this method appropriate will be there. Why? You see that your current cost, your stock productions will be there, old stock will be at the old rate, because you cannot take it that at reduced price and your higher price stock you will keep it. That will not be the appropriate. Under this method, stock will be valued at old price, definitely, but not represent the current price. So this is the interchangeably concept is there. जो rising prices, LIFO method will help. So automatically stock should be taken as old prices, right? So this is the thing. Now next point is your base stock method. This is also another method that, but in such situation you understand that your FIFO method or LIFO method, these are very very simple and straightforward method. But under your base stock method, here some conditions are there. A minimum quantity of stock under the method is always held at a fixed price as a reserve price. You see that question of reserve price concept is coming here as reserve in the stock to meet a state of emergency. So always you have to minimum quantity of stock, you have to keep it. The minimum stock will be called as a base stock and is valued at price which the first lot of material is received and remains unaffected price fluctuation. The quantity in excess of the base stock may be valued either on LIFO basis or FIFO basis. You are getting my point? Here basic concept is there. Minimum your base stock you have to keep it. Over and above excess quantity, it could be valued either your LIFO method or FIFO method. Now we are coming for a specific price method. This price of method is useful especially when the materials are purchased for a specific. You see, when a specific job or work order, any material is purchased, so these cases, you know that in any government tender, they are specifically mentioned that your production should be produced from the particular type of product. That specifically their material. Then, so definitely you are purchasing for some particular purpose, job or product. So definitely it will be utilized on that price only. The cost of materials issued to production price to specific job represent the actual cost. So this method is specific for non-standard product. This method is this method, okay, on some particular item if you purchase then it's okay, but when you are voluminous regular purchase and numerous quantity of purchase, this method may not be suitable for that. So every method have some plus point, minus point. Management has to decide which method to suitable for your nature of organization, nature of product, etc. Now next point, we are going for the simple average method. By name itself it is clear that we are taking the average price which is computed by dividing the total unit price of each purchase by the total number of units. You see that suppose 4-5 lots you have purchased at the different rates, so total you add it and divide by the total number of units purchased. So this method is useful when the materials are received in uniform kind of similar quantity and price. You see that when prices fluctuate more, this method may not be suitable for that. Next point, your weighted average method. You see that weighted average method, why it has been taken into consideration? Average price method, only you are taking the unit rate, but here unit ka sath sath you have to take weight of the quantity also. So limitations were there, your simple average method should take into account the quantities also. You have to multiply the quantity into rate, multiply the quantity into rate, multiply the different lots, total price, quantity multiplied by the rate, that divided total quantity material stocks, total quantity material in materials in stocks. Okay, so that is the material issue price. This is the point for that. So this is the extension of your average method. Moving simple average method, this is also little extensions of your simple average method. Under this method, rate for material is determined by dividing the total of periodic simple average price of a given number of periods by the number of periods. For determining the moving simple average price, it is necessary fixed up the past period to be taken for determining. You see that here some technicalities is there. See, suppose a 3-monthly period is decided upon the moving average rate for the month of April is to be computed. Under that situations, you have to take the price from January to March and then divide then total by 3. That is very simple for that. Now moving weighted average method, this is also moving average method. Some extension, rate is computing by the total of the periodic weighted average price of a given number of periods of the number of periods of replacing method. See, this is the, under this method, the issue rate is computed dividing the periodic weighted average price of given number of periods. Simple average method, you are taking simplified average, or weighted average means you are multiplying the weight of the quantity. Next is your replacement method. So replacement price is defined as the price at which it is possible to purchase an item identical to that of being replaced or revalued. What does it mean? Replacement price is defined as the price at which it is possible to purchase an item identical to that of being replaced or revalued. See, similar kind of product, when replacement process is required, this method is applicable. Under this method, materials are valued at replacement cost of that material. You see that, what is replacement cost? Instead of that material, you have to purchase a similar material, what would be the cost? So that is the point here. Next, your realizable price method. Realizable price means a price which the material to be issued can be sold in the market. You see that, in case if you sell the market, what price you can get it, so that will be your the realizable price. This price may be more or less than the cost price, definitely, at which it was originally priced. Now last but not least, we will be discussing the standard price method. Under the standard price, you have to materials are priced some predetermined rate, that is the standard, irrespective of the actual. We will be discussing the standard pricing and standard cost. All the standard means some predetermined rate. This standard cost is usually fixed after taking into consideration the current price, anticipated demand trend, etc. This method facilitates to control of material cost and task of judging the efficiency of purchase department, but it is very difficult to fix the standard price when the price fluctuates frequently. You see, standard price fixing is easy when your price are more or less same. That means it do not fluctuate more frequently, then it will be possible. If you see that if it more fluctuate, suppose today you fixed one standard, it may. So we are concluding the video here, and we will be going one by one some other costing purposes also. Now we will be going the economic order quantity under the price, your how you are to cost fixation price also will be there, what quantity you are to purchase, so that your this ordering cost and maintenance cost will be the minimum. That will be going in discussion in the subsequent my video lecture. If you consider that my lecture has some value, please do subscribe to my channel so that whenever the new video will come, it will be coming to you first. आज के लिए इतना तो we are concluding the video. Have a good day.